Hello, everyone. Sorry, I'm a little on the lower end. It is a pleasure to be here with you this afternoon, and I'm pretty sure you've heard a lot about financial statements and all that good stuff. And here I am about to give you some more of that good stuff. As you know, the General Conference Auditing Service is charged with the responsibility of providing worldwide audit service to the Seventh-day Adventist Church, as well as monitoring the audit programs for denominational organizations in our client base. Our purpose, mission, and instructions on how we operate are outlined in the essay section of the working policy. We are required to function in compliance with professional standards, the same manner as if we were in public practice. One of the requirement of the policy is that we report to the GC and Division Executive Committee each year about the clients we serve, the reports we issue during the previous years. This presentation includes an abbreviated version of our annual report. The topics that we're going to be talking about today include financial, a brief review of the NAA annual report, the financial statement presentation, which includes some subtitles here for you. As you can see, you'll see one of those items include GAAP financial statements. This is big. This is an item that we're paying specific attention to and want you to be aware of moving forward. So, sorry, I'm having technical difficulties here. Oh. All right. This is backward. Hold on, give me 1 second. All right. Sorry. All right, it's on. As you can see from this chart here, a large portion of the work that we do, the audits that we performed, is towards education and institutions. This past year, it was about 40%. Institutions were most of our work was geared. This is mostly secondary school and also assistance with college and university audits. The next size is the conference audit, which is 18%. And you will see that trust is at 20. Now, you may say, well, 20% is, more than 18. But this is because we do the trust audits once every 3 years. And so the workload for a trust audit is actually smaller than that of the conference. And the other section includes, unions, ABC's Publishing House, ADRA, and etc. Now, there were some changes in the North America portfolio in 2013, and this is because we had Guam, Micronesia Mission Territory added in 2014, which include a mission, two clinics, 7 schools, and a radio station. There were also several new schools in the Canada area, and some ABCs were merged with conference audits for reporting and audit efficiency purpose. The next section talks about human resource. Again, one of our most important resource, of course, is personnel. Without them, we wouldn't be able to do the work that we do. All of our staff are required, as a condition of employment, to obtain professional certification. That is, you must be a CPA. You must hold a CPA license and pass the exam within 3 years of employment. Let's take a comparison. Let's take an overview of the workload or work plan results for 2014. As you can see from your chart here, for 2014, we had about 74% of work completed, and 13% work in progress. as well as about 1% postponed and 12% not attended. If we were to compare that to 2013, we had about 70% work completed, and in progress was about 17%. Audits that were postponed were not at all significant in the prior year. Those that were not yet attended to are mostly trust engagements and a few school audits. All right, a quick analysis of the work plan results. As you can see, this slide shows you a more detail and breakout of the clients and status of their audits, as well as the assets and revenues that were audited. The audits completed represent about 7.5 billion in assets and 2.3 billion in revenue. All right, I'm having some difficulties with this. A brief overview of the report issued on policy on policy compliance. As you can see here, 80% of the policy reports issued contain one or more policy non-compliance from the list of core policies and S90 of the NAD working policy. Now, just as a reminder, GCAS does not create policies. We cannot authorize variances from policies, even if we understand the reason for why an entity may not follow a policy. We do not authorize variances. We are required to report on compliance with all core policies of the NAD working policies. Now, only North American Division year-end meetings and GC Annual Council has authority to create, change, or delete a policy. According to NAD Working Policy B1510, only the NAD Division Committee is authorized to approve variance to policies. Now, let's compare these numbers to the prior years. Standard reports in 2013 and 12 was about 22%. And non-standard was about 78%. An overview of the opinions rendered in 2000 on the financial statements. As you can see, we were about 81% standard report, and about 13 qualified, and we had no adverse opinion, and about 6% disclaimer. Comparing those numbers to prior year, we had about 80% standard report and 73% in 2012, which is a continuing trend of improvement. In 2013, as far as qualified reports, we had about 16%. 2012, we had about 21% with no adverse opinion. Disclaimer for 2013 was about 4%, and 2012 was just less than 6%. Opinions rendered again on the financial statements, and we're looking at basically the total assets and total revenue. A standard report, we give standard reports on about 7 billion on assets, and standard on 2.2 billion in revenue. As you can see, the majority of the amount represents standard reports, which is good news. However, we know that there are some improvements to be made, as we still have a significant amount that we disclaim on, which is about 125 million in assets. That can raise some concern. All right, so let's just take a quick analysis of the reports that we issued out. Top 5 reasons for non-standard opinion on the financial statements. The first two items are very similar. Both relate to insufficient audit evidence, but differ to some extent. The first two result in a qualification. However, the second one, the first results in a qualification, but the second one is situation where lack of evidence was so pervasive on the overall financial statements that we could not at all afford to provide an opinion. The third items include asset belonging to other organizations. This is mostly common with academies owning buildings, or where sometimes they would record the buildings on their books versus the conference that holds legal title to those buildings. The fourth item is somewhat new in 2014, and it relates to being unable to audit beginning fund balance. And in some cases, this is because the prior period was a disclaimer, and as such, you are unable to audit beginning fund balance if you could not audit the prior period's ending balance. And in other cases, it's where the entity had not yet been previously audited, and as a result, we couldn't afford an opinion or being able to audit the beginning fund balance. The fifth and final one is broken in two parts, and it has to do with the first one is preparing cash flow statements. Not prepare part of the financial statements as a requirement by GAAP is the preparation of cash flows of a cash flow statement. So, there are some situations where the clients did not prepare their cash flow statements, and as such, we had to give a non-standard report. The second one has to do with problems and errors in net asset, which is an accounting which was an accounting error and significant enough to alter the opinion on the financial statements. Onto policy compliance report. The 5 top reasons for non-standard policy report. One is missing or incomplete conflict of interest statements. I know you have heard a lot about conflict of interest statements, and it's very common. The next one is monthly financial statements not prepared or presented to the board. Also, we have remuneration policies not being not complied with the NAD working policies, as well as investments that were not in compliance with policies. The first 4 items, of course, is somewhat the same as we've had in the previous years. The internal control letter or management audit communication letter. The first 2 items were also there last year, the same as last year. The last 3 are somewhat symptoms of a larger issue related to lack of oversight in the accounting and financial reporting system, but specifically relates to the process of reconciliation, authorization of transaction, and timely identification and correction of errors prior to the audit. So this is just an overview of the annual report for 2014. And now we are going to move to the financial preparation aspect of our report. Now, why are we talking about this again? And I know you've heard it. You've heard about it over and over. The AICPA Code of Professional Conduct, which was effective December 15, 2014, had been updated, has updated the independence standards. Preparation of client financial statement is specifically identified as a non-attest service and cannot be part of the audit. It has been common for GCAS to assist with financial statement preparation in the past. We can still do this, but there are specific criteria which must be met and documented for this to be done. Independent standard clarification. The client has always been responsible for doing the accounting and preparing the financial statements. The ethics code clarification confirms that. We often hear that, This is, according to the auditor's financial statements or versus our financial statements. Obviously, there are interim or monthly financial statements that your organization prepare, and those are for internal use or management purposes. However, there is a comprehensive GAAP financial statements that you must prepare at year end, and those have to comply with accounting standards. The audited financial statement are just part of your statement, as well as much as the interim financial statements are. Management must take responsibility and ownership of those financial statements. The impact of this clarification. The auditor must separate audit procedures from procedures involved in the financial statement preparation. The financial statement preparation can be done by the auditors without impairing our independence, even by one of the members of the audit staff, if certain expectations have been met and documented. That is, management assumes all management responsibilities and oversees the services to be performed, evaluate the adequacy of the reports, of the results, and accept responsibility for the work. This understanding needs to be documented in the engagement letter provided to you. So where do we draw the line between auditing the financial statements and preparing it? Now, pulling together information from various client sources and putting it all into one place, or reformatting the information can be part of the audit process. However, using raw data to create the financial statements or prepare part of it, or the entire statement, is considered a preparation or non-attest service. And that goes even if we were to prepare, your entire footnote disclosure or your financial statements, or if we were to prepare just one of your financial statement. If the data were gleaned by us, we put it all together, then that considers to be non-attest service. So ideally, it would behoove. Yes.
Does that create a conflict for you?
No, that does not create. Us preparing the financial statements for you does not create a conflict. Again, it does not impair our independence. Am I moving? All right, Robin. Yeah.
As long as those criteria are met and documented. Criteria that are on the slide.
All right. Now, a separate billing is issued for the preparation of your financial statements. However, the NAD and the unions have voted to subsidize those services through 2016. They plan to reevaluate it again in November. This likely won't last forever, but it provides a phase-in period for you. All right. So, our next item, NAD. So, what does the NAD working policy has to say about presentation of your financial statements? The NAD policy also has a lot to say on your financial statements. Whether the auditor assists in the preparation or not, ultimately the organization has sole responsibility to make sure complete GAAP-compliant financial statements are prepared within 90 days of your fiscal year end. Now, the 90-day is not yet part of the core policies, but you should pay attention to that. Yes, I'm hearing. Yes. So let's look at what makes up a financial statement, annual financial statement for an organization. GAAP statements and note disclosures. That includes your statement of financial position, that's your balance sheet, statement of financial activities, or your income statement, statement of cash flows, and your footnote disclosure. As you can see, these GAAP requirements match what NADS 29 number 1 is asking for, and is based on generally accepted accounting principles and meet the requirements of most organizations. These are just a few, there are just a few organizations which have specialized reporting requirements, such as your voluntary health and welfare organizations and retirement plans. In addition to the statements on the screens, voluntary health and welfare organizations are required to include a statement of functional expenses. Only a few organizations meet this criteria. There are some additional formatting and disclosures in the SDA accounting manual, and I would highly recommend that you visit the SDA accounting manual because it has some good information that you can use. The components of the financial statement: statement of the financial position, which is your balance sheet, and I'm pretty sure that you are all familiar with what goes into these subcategories: your assets, your liabilities, your net asset. You all know what that is, so I'm not going to go into details. I'm just going to point out a few common errors that we typically find when we look at your financial position. For example, the operating funds, due to, due from, and your plant liabilities due to, due from. So as you can see here, we have $10,500 in the as a due to or due from plant in the operating, but we only have $9,000 in your plant fund. So basically, we're saying the operating fund is saying, hey, we owe. Well, the plant fund owe us $10,500, but the plant fund says I owe operating $9,000. So those two should balance out to be to zero. They should net out to zero. Example number 2, we would expect to see, as you can see here, like for a conference who completed a second year of a 10-year lease. Of $10,000, you would see no liabilities in the current portion, and everything is in the long term. So what we would expect to see here is the current portion of the liability, which is expected to be paid in the next year or within your operating cycle. The statement of activities. Shows the activities of an entity over the period of time. It also separates activities between operating and non-operating. In the U.S., the changes in each component of net assets must be disclosed separately. So your temporarily restricted must be disclosed separately. Your unrestricted as well as your permanently restricted line item must be shown or disclosed on your financial statements. Another common error that we find, conference. Sorry, I'm losing my place here. So a conference pays $25,000 to ARM for property insurance. The conference bills $5,000 to the academy. The conference records $20,000 in insurance expense. Funding from churches and schools is typically revenue. All income and expenses should be reported or be recorded at gross amount. Obviously, agency transactions are not included in your income and expense. But if the insurance transactions are not agency transactions, which is typically the case, then they should be reported as gross income and gross expense. The accounting standards have guidelines to determine when an individual or entity is serving as an agent. However, in the documentation, we have reviewed involving conferences in local churches and schools. The conference was not an agent of the insurance company. The conference was made the owner of those policies, and therefore, all expenses and incomes need to be reported at gross income or gross expense. Another error that we find has to do with operating funds recording transfers in and transfers out. And I know Emmanuel covered some of that earlier. But transactions between funds should be eliminated in the consolidated total of your financial statements. Other errors that we have seen, a consolidated is when conferences and ABCs present consolidated financial statements. Instances are places where they do not eliminate the purchases made by the conference from the ABC, or the conference does not eliminate the payroll expenses in offsetting reimbursement from the ABC, or rental income and expenses between the conference and the ABCs. Those type of transactions should be eliminated at the consolidated level when we prepare our financial statements. Did I see a hand? No? Okay. Transfer of property from the ABC statement to the conference, but a sell is recorded at a markup. So if the ABC is transferring property to the conference, those should be transferred at book value and not as a sell to the conference.
Ask a question.
Yes.
So, between your conference and your ABC, you're saying that those transactions should zero each other out?
Correct. If you are presenting consolidated financial statements, yes, those transactions should be eliminated. All income and expenses should be eliminated.
So why do you recognize monies coming from churches as revenue? For instance, when you bill them for a portion of the bill, if the entity is owned by the conference, why is that revenue?
And you're talking about from the churches?
From the churches, right?
Well, we don't prepare consolidated statements with the churches. And this is strictly when we present, for example, the ABC, we present the ABC's financial statements with the conference as a consolidated financial statement as one. But I don't think we do for churches, the local churches.
I understand you don't include the local churches
Right.
activities, but I'm saying if the relationship between the ABC and so you're saying if we're consolidating the financial statement between the local church and the conference, then we will not recognize, then they will zero themselves out.
You would zero, yeah.
That's what
Yeah.
okay.
Robin, anything on that?
Some folks use it as a contra account, and I don't think GCAS like that.
Yeah, that's correct. The local church operations are separate from that of the conference. It's two separate entities, whereas typically the ABCs are a department of the conference. And so if you're putting them all into one financial statement, then transactions between different parts of your financial statement need to be eliminated. Now, if you're moving back to the insurance question, billing the insurance policies based on the policies we've looked at, discussions with ARM, and looking at the criteria for is this an agency relationship or a service provider relationship, the conference is the owner of those insurance policies. They are funding those insurance policies by charging a portion to the local churches because the local churches obviously are using the properties, they're protected by the liability insurance, etc. So the churches are funding that insurance by making payments to the conference, but that is revenue to the conference. You should not be netting that revenue with the expense on the financial statement. That would not be in compliance with GAAP.
Okay. All right, we have another question from Vic.
So then, with locally funded payroll, the when we book in the proceeds that are billed out to the local church or school or so forth, I've been putting that into a contract expense account, and it pretty much
And-
pulls it to zero.
Right.
So, and I've been doing that for years, and the auditors never said anything. But I know they always change their mind from one year to the next. So, I'm wondering if that's a incorrect way to do it, or if I should be recording that as revenue instead of a contract expense.
Right, and that's what we're saying, that should be reported as revenue at gross, and then
That's just horrible. See, for working capital, you guys say that's worthless, but then you want to.
All right, so that's what Gap is saying. Yes.
Just to clarify a little bit, and this issue is causing a great deal of consternation, and we were able to make a suggestion to NAD, which they voted at this last year end. So EJ's got some good news coming to you for your working capital.
Yes.
But to clarify, you said you've been doing this for many, many years, and that is not only, it was correct. For many, many years, it was correct. However, if you recall, when the decision was made that all of these employees are employees of the local conference, not employees of the church, that's when the change in that presentation needed to take place.
Been our employees ever since I started working. That's been 2001.
Yeah, in 2001 we were supposed to make that change, and or whenever the year was that they did the locally funded. I'm getting old. I can't remember what the date was, but yeah, it should no longer be netted. They should be separated. It's the closest analogy would be if you were to think of ADP versus account temps. If you think of ADP, that's a payroll processing center. They're just handling the payroll for you. It's your own employees. They're just handling the payroll transactions. So those, it's your income and expense. Whereas account temps, you're actually borrowing or using employees that belong to them, and they can net it. Okay, does that help at all? But anyway. Yeah, pretty much. Pretty much. We can help him if he wants some help, but it's not that hard to do. You're actually lucky. We do have a few conferences that even have both categories. They process payroll for a few entities within their territory as a service, plus they have a lot of employees. So some of them are even worse than yours. So no worries.
All right. Do we have another question coming? All right. Wow, I have about 5 more minutes. Statement of cash flow. I know this is a challenge for most clients to prepare, but again, this is a gap required financial statement, and you must prepare your cash flows. You can take a look at the accounting manual, chapter 6, which gives you a nice detail of what a statement of cash flow should look like, and has some details on how to prepare that. So I would strongly recommend taking a look at that chapter 6 of the SD accounting manual. Errors that we typically find in the cash flow statement is instances where your cash per the financial your statement of per the statement of cash flow is different than what you have on your balance sheet. So as you prepare your cash flow, take a look at that amount at the end, the year-end balance. That balance should tie back to your balance sheet. If it does not, something in there in your financials in your cash flow statement is not right. Other items: improper classification of activities between operating versus financing or investment activities. Recording activity at net for financing and investing activity rather than at gross. Netting payments such as netting payments on loans with new loans. The next portion is the disclosures, and I know that there is a whole lot of disclosure requirements out there that you must comply with, but many of which are in the footnote disclosures in the the footnotes of the financial statements. Now, your best resource is to have a good checklist, a good disclosure checklist. Some of those notes we'll go over includes the organizational description, the accounting policies, related party transactions, PP&E, employee receivable, leases, and net assets. So disclosure checklist. Again, you could there's a document out there that's about 97 pages long. Just a whole lot of disclosures. And I have a handout for you, which Vanessa will made available to you on the website somewhere. But it's pretty lengthy, and you can take a look at that. But you also have the option to sign up with Ernst & Young. You can sign up for a free account, and it will take you through an online interactive way to get a really nice checklist disclosure that's kind of customized to your need. Next, general disclosures. Generally, you need to have the name and description of the organizations, the accounting framework, any going concern there is, comparative information, and authorization date. Now, let me just zoom into the authorization date. A lot of you are asking, well, what is that? What is this date? This date, it should match the auditor's report date, and is the date which the signed representation and release letter is signed. So the date that you signed the release letter to us, that date should be your authoritative date, and that should be shown in a footnote in your financial statements. Footnote disclosures, these are some examples: the accounting policies, classification of net asset, concentration risk, and etc. In typically footnote number 1 and 2, you would have your depreciation methods that you use, inventory valuation and pricing method, amortization of intangible assets, as well as revenue recognition principles that you use in your entity. Another challenging footnote is the investment footnote disclosure, and I know a lot of you have some difficulties with that, as well as the employee benefit and retirement plan. Now, I am running out of time, but for the retirement footnote, before I go any further, for your retirement footnote, typically you usually get that information from us. And for those of you who pay attention to that retirement footnote, you notice that the format is somewhat different than has been in some years ago. But that information, GCAS typically is provided with that from NAD. However, moving forward, the retirement plan will provide that information to each organization so that you can update it accordingly as you prepare your financial statements. So again, a best place to start as you prepare your financial statement is use the prior year's audited financial statement. That's going to give you a very good start. And also, we have Excel spreadsheets of your previous year's financial statements, and we can provide you a roll forward of that, or a version of it, so that you can update your information accordingly. That's all the time I have. They're telling me that I need to leave.
I wanted to ask if you can give them your information so they can contact you for more.
Yes. I will well, if you have any questions, and I am downstairs, and you can come
The
to
free
my office.
hotline. The
Yeah.
free hotline.
All right, my number is 443-259-9613. So if you have any other information, I can provide that to you. This PowerPoint should be placed on the website as well, so you can get more information on it. Thank you.
All right.